Hello friends, welcome to another video. Here are 8 things I wish I knew before I started my dividend investing. Number 1, I wish I started investing much sooner. I know it's so cliche to say that the sooner you start, the better. You hear that advice and recommendation from investment advisors, from family, from friends. You know it, you probably know it too, but you're intimidated by the word investing or even the idea because you think investments have to be done by some professionals with accounting background or finance. That's a big mistake. Or that you need to accumulate a large amount of money before you get started. That's a mistake too. Or that investment is for old people. You're still too young, you need to enjoy your life. The sooner you start, the better. Because once I saw the progress I was making, the dividend income flowing in, I was so sorry I didn't start sooner. You can start investing with just $100 on a brokerage on your cell phone, and that's what you should consider doing. Because once I became focused and intense and started contributing regularly and throwing more money at it, I could see the increase in dividend income, and I was so sorry I didn't start sooner. Now, I happen to have 3 accounts on the brokerage I invest with, which is Crest Trade. I have an RRSP, that's equivalent to a 401k in the US. I have a TFSA, known as the Roth IRA in the US, and I also have a margin account or a taxable account. So the margin account I only opened at the end of summer of 2023. Now, I put in it only $1,200, and over the last 7 to 8 months, I have received over $100 in dividends on this $1,200. Now, that is a return of more than 8.5%. And seeing that made me really kick myself, wondering, why did I not do this sooner? So this is an encouragement for anyone on the side. Plan to start as soon as you can. You don't need a big deposit, a big amount to get started, or any knowledge in finance or accounting. So that's number 1. Number 2, I wish I contributed regularly or consistently from the beginning. So in the beginning, like most beginner investors, I only contributed when I had money to spare, so to speak. I'd contribute 100 or 200 or 500 when I got it, and then I'd skip months. That was a big mistake, because the more you contribute consistently, the more you'll see the dividends also come in. Remember that in the beginning, the growth of your portfolio is really dependent upon your contributions, because the dividends are really small. So until you get to a place where, like Charlie Munger, the late Charlie Munger says, $100,000 perhaps, and I'm not saying you should get there because I'm not there, and I can see the increase in dividends, and it's very encouraging and heartwarming. So contribute consistently, set up automated contributions to your account known as dollar cost averaging. And because of the volatility in the market, you'll find that sometimes you buy stocks when the market is low, sometimes when it's high, sometimes when it's flat. Over the long term, you're a winner. So I wish I had started contributing consistently right from the beginning. So that's number 2. Something else I wish I did right from the beginning was to first take care of all my other financial priorities, and to make sure that any money I was investing was money that was going to stay in the market and I was not going to withdraw it. Granted, I had covered all my basics. I was able to cover, any debt obligations. I had a small, contingency fund on the side. So I was sure I was not going to withdraw any money. But then I wavered and I decided, I'll remove money from the investments to put in a different investment. That's a mistake. So as I recommend, if you've watched some of my prior videos, do not start investing until you've taken care of at least those 3 financial priorities. You can cover your basic needs, you can meet your debt obligations, pay off all high interest debt, or be able to cover your minimum payments, and make sure you have a contingency fund so that any money you put in the market, you're not going to remove, because that interrupts, the growth and the snowball effect and the dividends as well. And then you waste time as well. So because you've probably had time in the market is more important than timing the market, because you can time the market all you want and lump in money, but someone who is there consistently will make more money at the end of the day. Number 4, I wish I had put some time and effort in researching my stocks before buying, even as a beginner investor. Because when you're just starting, you're very excited. I was excited. I bought stocks based on recommendation from friends and videos I watched online. That's a mistake. If you do some research, educate yourself, and pick stocks that you can hold over the long term, then you will not be forced to liquidate and sell. That's expensive, because not only are you losing time, but you pay commissions every time you sell stocks. So I wish I had put some time in investigating or researching my stock and not just rushed to pick and invest in so many stocks, because suddenly I felt like I can get dividends from this and from that. That was a mistake. So make sure to put some time in researching stocks that you want to invest in, and not just put money in all stocks that are being recommended by friends and family or the popular ones you see from YouTubers. That would be a mistake. Number 5, I wish I simply bought stocks in companies that I understand and knew right from the beginning. You know the kind of companies I'm talking about, like Coca-Cola, Procter & Gamble, Johnson & Johnson, Apple, Alphabet, the big Canadian banks, TD Canada Trust, Royal Bank, all the common companies that we buy things from. Everybody's drinking Coca-Cola. Procter & Gamble, they're a consumer products company, but they have products in so many different segments, from healthcare to beauty to animal care to home cleaning, to cleaning detergents. You know, you've heard of Tide, Downy, Bounty, Oral-B, Metamucil, Pampers. You know, if you buy stocks in a company that you understand, that is well established, you will hold them for a really long time. And most of them have been around forever. Both Coca-Cola and Procter & Gamble, and the 3 Canadian banks that I just mentioned, Bank of Montreal, TD Canada Trust, and Royal Bank, have all been around since the 1800s, and they've all paid dividends forever. Since the 1800s, Procter & Gamble and Coca-Cola are considered dividend kings because they have paid and increased dividends consistently for over 50 years straight. So if you buy stocks from companies that you know, that you're familiar with, you will find that you will hold on to them, and most of them are mature companies, so they're paying dividends. You know that they've paid forever. While the past is not an indication of what the future will be, there is this inbuilt confidence that they're so large, they have very strong competitive positions, that they will continue to make profits, and so you'll continue to earn dividends. Number 6, I wish I understood when people say that the markets are volatile, what volatility means. If you understand getting into the market, that the market goes up and down, and that's okay, because over the long term it does go up, you will not be discouraged or feel stressed when everything is red, because 2022 happened when I was a beginner investor. I started investing at the end of 2021, about October, November, and then in early 2022, interest rates started to go up to control inflation all around the world, really all around us. And then there was political instability in Eastern Europe, and that didn't help much. So the stocks were down, stock markets were down everywhere. My stocks were red the whole of 2022. I'm sure that was the case for many investors, individuals, and companies, and it can be a very stressful time. But remember too that unless you sell out of those positions when they are in the red, the market always recovers. And I'll take a moment to make this disclaimer. Please note that this is not financial advice. So if you're looking to invest and need advice, consider consulting a professional. So volatility will happen. I wish I understood this getting into the market. I wouldn't have been so stressed out and discouraged throughout 2022. Number 7, I wish I knew from the beginning that dividends start small and slow. You would think it's logic, right? But if you do not know, if you do not get a good and clear understanding that dividend payments will start slow and small, you might get discouraged. Remember that dividends are just pennies and few cents and dollars, but as you build your portfolio, as you buy more stocks, so will your dividend income. If you've watched one of my previous videos in which I share all the dividends that I have earned since my journey started in 2021, you will recall that when I first started, one of my first dividends was just 8 cents on an ETF. But ultimately, this improves because it's been over 2 years. And as I continued to contribute and consistently put more money in my portfolio, as I continued to contribute, in February of this year, I got a single payment of over $180 from one stock. And I took that money and bought 3 stocks in a different company that I wanted. Finally, number 8, know that you will make mistakes. I wish I knew this from the beginning, then it would not have been a stressor to me when I had to buy stocks, then turn around and say, oh, I don't like this, and sell out of the position. Now that I think of it, it's logical. Even big companies make mistakes. Remember in 2023 when a lot of big companies, including pension funds, had to sell out of positions that were associated with cryptocurrency? Yes, you will make mistakes too, but use them as a learning opportunity. That's what I've done. And so I've learned that before I pick a stock, I research it, I make sure I'm comfortable with it, I'll hold it for a long time. But ultimately, I am enjoying this investment journey as I see my portfolio grow, and you should try and do the same. You'll make mistakes, every investor does. And if you know that out the door, then you'll not be very discouraged when the time comes and it's like, oh, that wasn't a good idea. Regardless of mistakes or not, I think it's very exciting as you start to see the dividends pouring in, as they grow, as you start to get bigger checks, not just cents, but $100 or more, and then hundreds, hopefully. And so I hope you enjoyed this video and learned something from it. If you did, please consider liking and subscribing. Thank you for watching.